Hello guys, welcome. All right, let's get to so this today we are going to be talking about coupling directional bias with time and price. Okay, so the time and price theory in forex market, price moves with time, right? Price moves with time. I'm going to be explaining this detailedly when we go further, right? So we've already talked about how to identify break of structure. And identifying this break of structure, you do it in line with your markets, with your directional bias, or you do it in line with the institutional order flow, right? You do it in line with the institutional order flow. All right, so coupling price directional bias with time and price. Remember, directional bias here is your institutional order flow, where price is going to. So if you know that price is going this way, what you need to know the time to be able to engage. All right, so let's get to the Discord server and see some little things I wrote about that. All right, so time and price concept, here we are. Okay, so now time and price concept in the forex market is traded on sessions, right? The market is traded in sessions. We have London session, New York session, we have the Asian session, we have the Tokyo session. I mean, there's a lot, all right? But we are focused more on the London and the New York. Now, this session, it is divided in this way because in these countries where, like for example, in London, there is high volume of some currency pairs that are traded at this time, okay? And then as this is because now within the London time, you have a specified time where their banks are open, right? So when their banks are open, there are traders, or during the day, they have a lot of participants in the market, and because of that, you have the currencies that have to deal with London, like the US dollar, will be very, very volatile. Okay, so that is it. So that is why in a country like Asian session, I mean in Asian, the Asian session, the US dollar or pairs are not actually that moving that much. Okay, we are going to get to the chart and I'll explain that to you much better. So remember that in the forex market, it is traded in sessions. We have the Asian session, we have the London session, we have the New York session, we have the Tokyo session. All right. So each session has the currencies that do well in that particular session. Okay. Each session has the pairs that do well in that particular session. Like I just say, give an example, like for the London session, since US dollar, it's based in the London session, that's the highest currency that is very, very volatile. That means it moves fast, very fast. Okay. And if you go to, yeah. So now, like I said, it is traded in sessions. We have three main sessions that we are going to be talking about, which is the Asian session, the London session, and the New York session, right? So let's start with the Asian session. The Asian session, let's say in Cameroon time, is throughout the night, all right? It's throughout the night. So here you have 12 a.m. to 5 a.m. GMT plus one, right? So this is during this time, that's where we have the Asian session. And at this time, it's always like an accumulation phase. Price is actually not moving most of the time, right? Price is barely going up or barely going down. It's like in a ranging time. Price is not actually moving. And then now we have London. Let's start with this one. LOKZ. This is London kill zone, all right? London kill zone, which means that there. Now, there's one thing that I should let you know, which is this IBDA. IBDA means interbank price delivery algorithm. That's what delivers price in the forex market. Okay, the interbank price delivery algorithm. So this algorithm delivers price. Okay, it has a way that it delivers price in a day. So it is this algorithm that have actually been studied, and they know that during this time price is this way, during this time price can be delivered this way, during this time price prints this kind of patterns. Okay, so looking at this Like I said, the London kill zone. You just from the name, the London kill zone. This means that there are some certain movements that price make during this particular time. Okay, during this, but you need to know that London kill zone, it starts around London itself, right? London itself starts since Asian start ends at 5 a.m. GMT plus one. London starts and then London starts 6 a.m. and then it ends at 12 p.m. Okay, London net ends at 12 p.m. So it starts 6 a.m. to 12 p.m. But within this time, as from 6 a.m. to 10 a.m. is called London kill zone. We are going to get closer to that. Now, if you notice here, you have seen me write from 10 to 12 is London launch. So during this London launch, the market starts to slow down. The market starts to slow down, okay? Now, we have New York here. New York starts from 12 p.m. to 3 p.m., okay? The New York kill zone starts from 12 p.m. to 3 p.m. But actually, I'm going to show you guys this on the Forex Factory, okay? Now, these times I have put here is just they are the times that the price is actually very good to trade, or it prints clean without a lot of manipulations, okay? Without a lot of manipulations. So, like you hear me say, New York kill zone, London kill zones, these are good times to trade from 6 a.m. to 10 a.m. and from 12 p.m. to 3 p.m. New York time. Okay. So now the IBDA true range, okay, which means that the interbank uh, delivery algorithm, it delivers price from 5 a.m. to 8 p.m. in the night. Okay. So from 5 a.m. to 12 to 8 p.m. in the night. Now, this is the reason why you know that, like I said, Asian ends at 5. So the interbank price delivery algorithm starts to deliver price at 5 a.m. So which means that during 12 a.m. or midnight, price is actually not moving normally. Like you can hear me say here, away from this time, there will be abnormalities in the market. All right, there will see a lot of manipulation. So how do we engage price? When you are in on a kill zone, you look for PDRs. PDR means premium or discount arrays that price will be hunting for liquidity. Then you look for rejections or price patterns at that time and those areas, and then you trade. So let's just go straight to the charts and we look at it. Okay, so at this point here, this is the monthly time frame of Euro USD. Okay, now you don't just look at time and price blindly. You have to first of all start from somewhere. You need to first of all see price approaching your point of interest. Is it an order block or whatsoever? Now, this here is a break of market structure. We all know that, right? That's our BMS at that point. Let me put it at the top left, and let's make it at 14. Okay, so this is our BMS right here. Price broke structure here to the upside. You can see the sponsorship from there. Price went swiftly up. Now, where is the last candle before the move up? This is it here, right? This is the last candle, that red candle, the last candle down. So here is our bullish order block, right? So put it positive, that's plus OB. Okay, let's put this one now at the right. Okay, so this is our bullish order block, right? From the monthly time frame. Let me put it even monthly time frame, monthly time frame. Okay, so here is our order block on the monthly time frame. And remember, I said higher time frames, they takes the lead, all right, in the videos you have watched already. So higher time frames takes the lead, which means that at this level, all that you'll be trying to do should be just to be buying, because even though at this point, price is going to be giving you some sell order blocks, but you need to know that you are in a very critical zone, especially on the 1 month time frame, and price has to react to it. So you have to be careful. You need to know that your IOF, your institutional order flow here is about to be bullish, okay, even for a retracement. So I want us just to focus on some few of these up movements here as price hits this POI. How will we have engaged price with the time and price concept? How would have engaged price here looking at time and then looking at price, okay? So now, just a little bit of explanation. Let me do something here. Now, this is how a candle is. Candle is like this. and then it trades down. Now, if this is a bullish candle, if this is a bullish candle, it means that the open is here, right? This is the open of the candle. And then this is the low of the candle. This is the close of the candle here. This is the close and this is the high. Now, this means that when the candle opens at this point, all right, when it opens at this point, this is the daily time frame, all right? When it opens at midnight, right? And what did I say? At midnight, you will always see price just moving like in a consolidation most of the time, right? So now when it opens here, it starts trading like in an accumulation phase. And now for price to create a wick down, like the low, if it is to be a bullish day, then price will have to create a low down, right? Which means that price will now drop down, okay? Price after this accumulation will now drop down. It creates this wick now, right? And then it goes back up. It creates a certain high, then comes back down, right? And then it closes at this point. When it closes here, when the candle closes, another one opens. It gives another accumulation. It trades down, it goes up. That's how the market moves. That's how to interpret a candle, right? Like you can see most of the candles here, they have wicks down. It's not a must that the price must go back down. Even this point where price goes down, it's coming down. If there is a PDR here, price will come down to it, which means that if price opens and is doing accumulation and you have a bullish order block here, price can come down to it before you buy and go up. And that's what to do, right? That's how to trade with time and price, okay? You wait when the accumulation, when the Asian session is there, you wait for price and then it manipulates down, right? This is called the manipulation phase. It manipulates down to your order block and then you buy. So this is AMD. This is an AMD lesson. I'm going to teach you guys on that. Accumulation, manipulation, and distribution. So I just wanted you to see how a candle forms, right? I just wanted you to see how a candle forms. So I want us to look into this level and then we'll see how price delivered here. And then we see how we could have engaged price with time, using time and price. Okay, so let's just now looking at this level here, we notice price came down back to this fair value gap here, right? Price came back to balance this inefficiency and then it started going back up, right? So let's just focus on this. I don't know if I will have I don't know if I will have this replay here on 1 hour. Let's try. Okay, there we go. All right. So remember I said price leaves inefficiency behind and it comes back to feel that. You have the lesson already, right? So now with that lesson, how would you have engaged price knowing that price came back to feel this inefficiency, right? Now price came back to feel the inefficiency and then after it feel the inefficiency, you had a break of structure, right? This break of structure happened. Now looking at time, BMS, looking at time, where did all these pullbacks happen? That's what we are going to be focusing on, right? Let me copy that to this level, copy to this level, copy to this level. I want us to see if all this was happening during our kill zones, right? Did it happen in London or did it happen in New York? But remember I said, this is not where you come to buy, right? You don't buy here, you buy at a retracement and then price goes up, comes back down, you buy, price goes up. If you come and you notice price is already here, you have to wait for a retracement. And waiting for a retracement, you need to know whether which session is going on, right? And you need to know where you are waiting for the retracement to come and end before you engage your buy order, right? So that's the same thing that happened here on the daily time frame. Price went up, we needed a retracement, it retraced back to a BC, all right? It retraced back to a BC on the daily time frame. So we need to engage price on a smaller time frame. So what do? We see price give us a break of structure here. I've talked about BMS to you, right? So there's a lesson on the there's this lesson, stop page and BMS RTO. I'm going to talk about that later, right? So now price gave us a BMS. Let's see if where could we have engaged price and at what time. Now, if you see here exactly at this point, all right, or whatever, if you see this is from let's say with 6 this is 6. Let's get it now. Let me use this cross so that you'll be able to see that very well. So at this point, here was 8 a.m., right? 8 a.m. here. 8 a.m. is within London kill zone. Remember, I said 6 a.m. to 10 a.m. Okay, 6 a.m. to 10 a.m. is London kill zone. Okay, it's London kill zone. So when you look here, you notice that this swift rally to the break of structure started it started at 8 a.m. All right, we had a strong rally up. So which means that this is London is open. And remember, London closes at 12, right? So London closes at 12. Now, London opened and then it went up, broke a structure, but it left something behind. What was that? We had an inefficiency here, which is a BC. So price came back to it and then you buy, right? Now, price went right up. And then now, at what time did price reverse back here? Let's check the time. That was at 10 a.m., right? 10 a.m. Exactly 10 a.m. That's London time, right? That's London time. Now, we had another pullback here. You buy, price goes or break the structure and then comes back down to this other block. At what time, right? Let's check. That was 3. That was price reverse back to it at 3 p.m. All right, 3 p.m. That's New York time, right? So price went up again, come back down the next day at 9 a.m. That's London kill zone. So all this, I'm trying to make sure that you understand that the market, it doesn't act as the market doesn't move in a straight line. It will always go up and come back down, right? And better entries or good entries, price gives them on kill zones like the London time and the New York time. Okay, so let's say let's just see something here. Okay, let me just reset price, right? I want to reset price and then we'll go right down to the 15-minute. I want us to go right down to the 15-minute and then we'll do some little studies. Now, if you see these lines from here to here, from here to here, if you look at this line, you will notice that these are daily, is a daily separator, okay? Let me even go straight to settings. You can go to settings and then you on your, from symbols, no, that's from appearance. Yeah, you go to session breaks, you on your session breaks, that will to indicate the daily trading volume. All right, you see the blue line on my screen. This is the day starts here and then it ends here. So within this structure, how would we have engaged price? All right, I want us to do it now practically. Now looking at this here, price opened at this level. It wasn't actually going nowhere, right? It wasn't actually going nowhere till when did we say Asian session ends? The Asian session ends at 5 a.m. This is exactly where 5 a.m. is. Let me make that at least 2 points. Yeah, that's where 5 a.m. starts, right? It ends. So the Asian session has ended, right? The Asian session has ended. Now what happens? You see price pushed back up. It did not clear these highs here, right? We still had some liquidity sitting above these areas here. We still had some liquidity sitting above that area. Remember, this particular day was to be a bullish day, all right? Was to be a bullish day. So price went up. It did a small break of structure here from this level. This is a small break of structure here with a wick. If you go down to a lower time frame, you actually see that it's a body of a candle right there. So we had a break of structure. Now, where are we going to engage price? The next thing we're going to looking for is the London session, right? Since our Asian session has ended here, we go now to look for the London. Now, you notice price came back, rallied back down. This is a pullback that is happening. Where did the pullback came to? This is a mitigation block, right? Remember the blocks I told you. If you see, you notice that price here did not come to the open of it. So during this time, we had a mitigation block. That's where you can take your entry for the London session. And London went, cleared the liquidity, came back. Now, at what time did this happen? Price also came back again to this other block here, right? Price came back again to this other block. This is now during New York, right? This is New York opens at 1. It opens at 1. Let me just put that on the screen for you. 1 here. So New York opens here and it rallies back down to give us a deep retracement, and then you enter your position, right, on this other block. This is an order block, and then this is an order block here. Okay, so here, this is your first entry during London session. This is your second entry during the New York session. You enter, you put your stop loss below the swing low, and you put your take profit right up, right? So you notice price came right up to this level. So that is how you target price. Let's go again to the next day. Or let me do this instead. Okay. Let me just go to the daily time frame and we look at a day that is bearish or bullish, and then we see how we could engage price on that particular day. Okay, so let's look at this long day, this particular candle, long candle. All right, and then see how we could have engaged price on it on a during our session trading. So let me go straight to the 15 minute. Now, this is the 15-minute time frame. This is where the day opens, right? Now, you will notice that when the day opened, price actually was not doing anything, like I said, right? Price wasn't going up, no, coming down at this level. So what are we waiting for now? You notice that price came right to from 5 a.m. Remember, Asian session ends at 5 a.m., right? So that's where price ends for Asian session. This is your Asian session at this time. Now, what happens? The London time opens and then it trades up. Okay, London opens and then it trades up. Let me go to the 1 hour time frame. Let's see if we had okay, right? Here it is now. So London opens, it trades up, it leaves an inefficiency behind. This is the BC here. And what happens? Price came back to it and then it pushes up. Okay. That's our BC right there. Price, it created this inefficiency during the London session, and then price came back to fill it. Right now, this session trading helps those that will actually not be trading all the time, right? So that if you discover yourself that you have free time to trade during the London session, you try to look at these things, look at these inefficiencies that are created in price, and then you'll be able to engage price from those areas. Okay, you'll be able to engage price from those areas. All right. Now, let's see. What about New York? New York starts at 12 p.m., right? And it goes right up to 3 p.m. So where is 12 p.m.? Let's just see 12. Yeah, here we go. This is 12 p.m. So at exactly 12 p.m., price came down as well and then rebalanced this inefficiency here. Okay. Look at that. That one was really a smart one, right? You see how price came back down and then it rebalanced this inefficiency. Price came right back down to this level. It rebalanced this inefficiency here, right? So that was 12 exactly. This candle, this red candle was at 12, and the 12:15 we got tapped to that area, and then you enter your buy from there. Since it's a bullish day, your institutional order flow is bullish, you enter your buy around that area, you put your stop loss below this swing low, and what happened? You push prices up, right? You know where price is going to. I'm not going to be talking about that again, all right? You know where his price is going to. And for the person who entered during London, your entry would have been here, and your stop loss, if you want to put your stop loss here, it's okay. But if you are using the 1 hour time frame, your stop loss can just be below the CB of the 1 hour time frame. And we all know where price was heading to, right? Price was coming right up to this highs here, and that was a CB on the weekly time frame. Okay, so that's how you engage price. Now let's see again The following day was a bearish day, right? So let me just play price and then let's see. Okay, the day has opened, right? The day has opened. You can see what price is doing. Stop. Okay, that's the end of the day right here. Okay, so price was going up for a weekly order block. It went up, hit the order block, and then it starts selling, right? So now at this point, where did the Asian session end? At 5 a.m., right? 5 a.m. 5 a.m. This is the end of Asian session, 5 a.m. So London kill zone started at 6. It came up and cleared this high, right? Price came up, cleared this high. So let's go start from the 1 hour and see what happened. So after price came up, cleared this high, came back down and closed at this level, the next candle open and trade this lower, right? This gives you an indication that price is actually going down. And what happens? There was an inefficiency that was opened within this candle, right? There was an inefficiency that was open here, okay? This is how it was. So if you are looking at price and doubting if you should sell, and then you see this inefficiency, you can maybe go to 15 minutes. At this point, you are waiting for price to come up to this level and then you sell, all right? If you like, you go to the 5 minute, you can now, you see areas, all right, where you can sell. Now, this, let's just look at this area here. Let me play that a little bit. I want to show you guys something. So you see how price tip into the BC, to the CB, sorry, that's the CB, right? Immediately you see this drop on the 5 minute time frame. If you are wondering if you should enter from the 1 hour time frame, all right, you can now take the entry here. If you are somebody that is afraid, or to just to enter exactly at the BC and put your stop loss above the BC. If you were somebody that was scared and waiting for confirmation, immediately you see this long bearish candle, you enter your trade, you put your stop loss above it, right? Now, if you enter and put your stop loss above that swing low, then you are expecting prices to drop, right? So all these things are happening within kill zones. Let's see what was here. What time was it? This was exactly at 10, right? Which is London time. Exactly at 10. Remember I said London session, it starts 6 a.m. and it goes right up to 12 p.m., right? But within that time, we have London, we have lunch for a London session, right? So at this time, price came back exactly during the London session to balance this 1 hour inefficiency, right? And it started going down. Let's see what happens at 12. Maybe price gave us some, where is 12? Where is 12? Here we go, right? This is exactly at 12 p.m., right? At 12 a.m., which is the open of New York. Let's just play price and see if price gave us an entry during the New York session. So the New York now is open. The New York is open. The New York is open. We are expecting a pullback. And what happened? Price came back swiftly into this order block here, right? This last up candle before the swing move that broke structure right down here. Okay, that's our BMS, and this is our order block. This is the pack, right? Remember what I said in the last video? This is like a station or a pack where the taxi driver or whosoever took passengers and the car was fully at once, right? So he left immediately. You see the sponsorship, no breaking out on the road to take passengers anymore, right? He took off immediately from this particular station here. So that is what happened. Price came back during New York and gave us another entry at that particular point. Remember, we took this entry from London, and during New York, this is the entry that we have had from this other block, right? Remember, even from the other block, price created an inefficiency. So if you were to enter even right from the inefficiency, your stop loss will still be above this swing high, and then you push prices down, right? That was a bearish day. So you would know that the most important thing is to know your direction for that particular day, right? Your most important thing is to know the institutional order flow. Once you know where price is heading to, you will now know how to engage price. Okay. If you know where price is going to, you will know how to engage during these sessions. All right. So it's nothing hard, guys. It's nothing hard. It's nothing hard. Let's cross check that again. London session opens and then it closes at this thing. Now, this is for kill zones, right? This is for kill zones. All right. I'm going to, let's go back. I'll go to Forex Factory and I'll show you guys something right there. Let's see Forex Factory. Okay. This is Forex Factory. I want to, if you don't know how to look at time, or you don't know how to look at, if you forget about sessions, okay, you can check this out. Now, this is sessions here. From forexfactory.com, you come right down to these sessions. Now you have Sydney session, you have Tokyo session, London, and New York. So you discover that right now it's only New York that is open, right? It's only New York that is open, and it opens at what is that? That's already 1:30 p.m. Okay. So if you look here, you discover that it opens at 1, right? And then London session here opens at 8. Okay. It opens at 8. Now there is also a website which is called Forex. How is that called? Let me just straight Forex sessions. Let's see what we have there. Forex sessions. Okay. Forex sessions, guys. Let's just check that, and we'll see. There's a particular website that gives lessons on this as well, right? Market hours. I think this is it. First time converter, market hours. Okay, time zone converter. Yeah, Forex market time converter. All right. So with the London time, you can be able to actually convert it to Cameroon time. Right. This is it here. These are the sessions that we have, right? So the Frankfurt, Germany session, which is European, it starts at 6 a.m. to 12. 6 a.m. It closes at 2 p.m. Now it is closed, right? So the only session that is open now is the New York session. You always have to check that, all right? If you like, you can come to the Forex time zone converter, right? It is already converted to my time, right? If you are from Europe, wherever in Africa, you can select it and it's going to convert it to your own time, right? Let's see, let me see here if I'll see Cameroon. Okay, let's check if we're going to see Cameroon here. Canada. All right, this here, Africa stroke Douala, right? So that's Africa stroke Douala. Let's just check it out. It has been now converted to the Douala time, right? So if you look here, you discover that you have, even using the Douala time, it is still New York that is open. So when you look here, this is the time zone. This is the Forex Market Center. Here is the opens. And then here is the close, right? So during London opens at 8 a.m., right? In Cameroon time. It opens at 8 a.m. and then it closes at 4 p.m. So from 8 a.m. to 4 p.m., London session is open, right? Now, New York starts at 1 p.m., right up to 9 p.m. Okay, so New York is going to close at 9 p.m. All right. So if you discover that there is within 1 p.m. and within 1 p.m. to 4 p.m., London and New York session is open, right? So we have a Sydney session with Australian. This one deals with the Australian dollar pairs, right? At this time, 10 p.m. to 6 a.m. The Asian Tokyo time, this is and that. So You can come here to have a broader view of these sessions, right? But to summarize it like I did, you have, these are the best times to trade, right? From London kill zone 6 a.m. to 10 a.m. All right. Normal London launch 10 a.m. to 12 p.m. New York kill zone 12 p.m. to 3 p.m. If that true data range starts from 5 a.m. to 8 p.m., that's actually a trading day, right? That's actually when the algorithm is delivering price actively. But away from this time, away from 5 a.m. to 8 p.m., price is no more, that is, you start to see abnormalities in price, okay? So that is it. That is it. You can go back to your price, go back to time, you look at price, you relate it with time, right? If you have a bearish day, check it out with time. Now, let's just check this last one from here. Okay. So actually here we were to have a bullish day, right? This is a bullish day that we have here. So let's just go down to 15 minutes and see how we would have engaged price with time. Okay. Would have engaged price with time. So this swing lows, I will just go focus on this swing lows, and we had a break of structure right here. We had a break of structure, and another break of structure, and another break of structure right here. So remember, session, it starts with the Asian session and it goes right up to 5 a.m., right? Let's just put it 5 a.m., 5 a.m. So 5 a.m., then the London opens. London opens, comes right down and it clears the liquidity down here, right? And then it went up, make a break of structure. What happens? You identify your order block, right? Price came back to the order block, but went up, came back down exactly at 12 p.m., right? That's the open of New York kill zone. You have another entry right there. And only within New York again, price created a small inefficiency here, came back to it, and then it rebalanced it. That's another place you can have another re-entry. Suppose that you came while price is already around this area, then which is going to be a bullish day, you wait for price to come back as a pullback and rebalance this, you enter again. Price did the same thing here. It left another inefficiency, and then you can take your entry from that level and you push prices up. Okay, that's it. You need to know your IOF. When you know your IOF, you simply wait for kill zones and then you enter on those levels and you smash the market. Okay, so guys, that is it. That is it. That is it. That is it. See you in the next video.